Okay. While your overall profitability was down on a comparable basis, the joint venture with Starbucks has really gone through the roof. Could you tell us about your expansion plans here, your rollout plans here? As you've pointed out, that demand has pretty much actually nearing pre-pandemic levels.
So before I comment on Starbucks, just a comment on the overall profitability. I think we're a company which was formed about 18 months back. And in the first full financial year, we delivered a 20% top line, 20% EBITDA growth, so very strong results. Quarter just gone by, June quarter, despite the second wave, we delivered 11% top line. Margins were under pressure precisely because of two things which we knew going into the quarter. One was the tea prices, which had spiked last year and which are coming down. So improvement quarter on quarter. And the second piece is we've got a sizable international business, which was cycling COVID-induced pantry upstocking last year. And that was a bit down, but margins remain strong. So while we did a negative on the bottom line, it was a 300 basis points improvement quarter on quarter. So that was one. The Starbucks business per se in India, I think it's a very strong brand. The team has built a very strong operating model. Unit economics are very strong. And we see competition under pressure. So last year, the year ending March, we opened close to 40 outlets, which was the same as the year before. And this is despite COVID. And this year, we intend to open more than that. The business is now about 85-90% out there to pre-COVID levels. We remain pretty confident in the brand, the operating model, and the fact that we will have consumers coming back into stores.
Mandy, jumping in here quickly, you mentioned that your margins have remained strong at the coffee business at the Starbucks JV, and yet, of course, there's been the high cost of tea and also the high and increasing cost of coffee. How much of those higher costs have you been able to pass on to the consumer in India? And as prices have risen, if you've been passing them on, do you see any discernible dent, any constriction on that demand if indeed they do feel those higher prices?
I think, Mandy, the single biggest impact in the India business per se is the rising tea prices. Coffee impacts us overall in the international space where we've got 8 o'clock coffee in the US. But in India itself, we have not passed on all the cost increases of tea for two reasons. A, we are very mindful of walking a tightrope between consumer elasticity, volume momentum, and most importantly, share. I would like to say that, I mean, last quarter compared to the same quarter year before, we've gained 170 bips in the tea business. So objective achieved. And as we go forward, we see tea costs coming down and therefore the margin expansion happening. On the coffee prices per se, as I said, in India, it's not such a big impact. It's more in the US business for us. And there we are hedged very, very decently for this fiscal year. Yes, but coffee prices are going up and therefore we will have to relook at our pricing.